Hi, Juan Finance here. And in this short video, I just want to share with you the difference between a long trade and a short trade position. Okay, so first we have to define what is a long trade. It's equivalent to a buy position, and you're actually making money when the price goes up. So your strategy here is to open low and to close the buy position at a higher price. Okay, open low and close high. So that's about a long trade position. Now, for example, in the global markets, okay, we talk about the global markets. We have here our position is buy. And then if you're going to look at here, if you're going to buy Apple, for example, at let's say 169 and your trade size is about $1,000. So you have here the button of opening the trade. Okay, so we deal with opening and closing a long position, which is equivalent to a buy position. Now, let's say sa local market naman or sa Philippine Stock Exchange Index. So you also have here an option for sell and buy, but this time we're going to buy, for example, ASEN quantity is about 1,000 shares and price of 950. Okay, so if you input your password here, you can now actually initiate the buy position. Okay, now in buying position, you are actually betting, or you want to make money when the price goes up. For example, let's go back to global market setup. If you input buy position here at 168, okay, price of 168. Therefore, you want to make money if the price increase. Okay, for example, if the price hit or go over around 180, that's your that's actually an income for you. Okay, the price difference now of 180 minus 68, that's now your gain. Okay, same here. Sa local market, if you're dealing with let's say ASEN and you wanted to buy ASEN at 9.50, if you place a buy position, okay, or a long position, you're actually want to make money if the price goes up. Let's say, for example, if the price goes up to 12, okay, so the difference of 12 minus 950, that's actually your gain. Okay, so long position is equivalent to a buy position wherein you make money when the price goes up. Okay, so let's jump to short trades. This is actually equivalent to a sell position, and therefore you are making money, okay, when the price goes down. And here your strategy is to open high and to close low. Okay, so take note of this because these are actually very different when you talk about long position. But this time we're talking about short position. Okay, so you're making money when the price goes down and you wanted to open high and close the position at a low price. So let's go back here to the global market setup. Now this time, let's try to um, click on sell and the price is 169. Your trade position or size is actually $1,000. Now try to note this one. You have now a daily charge or fee and a weekend fee. Now why is that? Now it's because when you sell, okay, when you sell the asset, it means that you're borrowing the asset from your broker. Okay, so you don't have the asset yet in your portfolio, but you wanted to trade it and you wanted to sell it. So your broker would need to borrow those Apple shares from elsewhere and then lend it to you. Okay, so that's how short selling actually works. Now, how about local market? Now, here, if you click sell, okay, look for ASIN, input the size, quantity of 1,000, price of 950, and then if you input your password, try to look at this. You have this note here that your order was not sent because of the following problems. Account does not have this stock position. So meaning short selling in the local market or the Philippine Stock Exchange is not allowed. Okay, so in the local setup, you can only sell the asset if you already have that asset in your portfolio. Okay, so see the difference here? In the global market setup, you can sell the asset even though the asset is not yet part of your portfolio. But in the PSE, you cannot sell an asset if you don't have an existing position of that asset. Okay, so here in short selling, you actually want to make money if the price goes down. So let's go back to Apple again. You bought it at 168. If the price goes down to, let's say, 140, the difference there is actually your gains. Okay, now what if the price goes up? Now, since you have a sell position, this area here is actually your loss area. Okay, this area down is actually your gains area. Okay, so that's about short selling. Now, for the local market, for the PSE, have noted here recent article. This is the most recent one I found. It's from Business World. We have here PSE to continue push for short selling, and the PSE will continue pursuing its plans. Okay, so you have here, it's not yet fully implemented, but it's being planned to be rolled out anytime sooner, maybe. Short selling happens, okay, when uh, investor borrowed securities. Remember, you don't have the asset yet, but you can sell it, okay, because your broker would lend you shares of those assets when prices are high. They will then buy this back once prices fall. So in short selling, you are actually making money when the price fall. Okay. Now, remember that short selling is borrowing something, borrowing those assets. So you may incur fees for your daily position, okay, daily fees and weekend fees if you try to hold those assets over a long period of time. So you have to be careful because unlike long positions, short positions, they have fees, okay? Daily fees and weekend fees because you are actually borrowing those shares from your broker. So that's all for this video. Thank you very much for watching, and I hope that you learned something. Please do like the video, and if you want others to understand, kindly share this video. And if you need to know more, kindly subscribe so you won't miss any future videos that we're going to make. Thanks for dropping by.